All right, let's talk about what's going on for FOMC. So let's run into this quick snapshot, quick review, what to expect, what the outcome that I predict. I'm expecting to buy gold, and then I'm expecting to sell the dollar. So you guys can clearly see this on the 15-minute chart where the dollar is headed right now. And let me show you guys the 4-hour chart. US dollar is trying to come back to test the 94.8 and then 94.9 before the FOMC comes out. I'm still selling it. Reason being, I don't expect the Fed to do anything. So I don't expect too much going on with the Fed for today and for this month. Maybe next month, but not this month. And so I expect them to be dovish. So we're going to sell the dollar. If we sell the dollar, then we're buying gold. And then we're selling USD JPY, we're selling USD CAD, we're selling USD Swiss franc, we're buying Australia, we're buying New Zealand, we're buying Euro, and we're buying the pound. The most basic principle that you should always remember is that if you're buying the dollar, then you're buying the US dollar, the US based currency pairs that are in the front. And if you're selling the dollar, then wait, hold on. Am I saying this right? Yeah. If you're buying a dollar, then you're buying the US based currencies that are in the front, like USD / whatever, right? And then if you're selling the dollar, then you're selling the US dollar based pairs, which is like USD JPY, USD to Mexican peso, USD CAD, USD Swiss franc, USD, all these other USD pairs that you want to trade, right? So, and then you're buying the euro, you're buying the pound, you're buying on gold, you're buying Australia, New Zealand. Now, the reason why you want to look into this basic principle is because it's the most important, crucial aspect in Forex trading. So, everything revolves around the dollar, and we hop into the Forex factory here. No, my textbook. You don't need a MyFXBook account. All you gotta do is click on the home page, click on Economic Calendar, and you can see that in 2 hours and 35 minutes, it's gonna release the Fed monetary policy statement. That is the most important thing that's coming out, not the rate decision. We already know they're not gonna raise the rates. If they were, it would have been on the consensus as a 2.5 interest rate. So they're not raising it. We're looking at the monetary policy statement to see where the Fed is going for the economic outlook for the upcoming fall and for the end of this year. So pretty much for the rest of this year. I have not really looked into the MBS purchase program or the Treasury purchase program, but I'm not really too worried about this because Forex Factory doesn't have it listed and investing.com doesn't have it listed either. So I'm looking at this, and it's the most important thing here, right? If you click on it, it says the statement may influence the volatility of the US dollar and determine a short-term positive or negative trend. A hawkish view is considered as positive or bullish for the US dollar, whereas a dovish view is considered as a negative or bearish. So it's very important. You can click on it, read up on it. There's many articles that were published today from the Forex News websites, and most of them are not expecting too much out of the Fed anyway, so that's why I'm going to go with them. I very rarely do I ever go with their opinion, but this is what I see. This is where things are going, and I'm going to sell the dollar for the upcoming FOMC policy statement, and then that's it. And then I'll give you a little quick preview on what I got for non-farm payroll for Friday. That's it.